Record. The previous week on our first day, we learned about market structure. Right. We learned about market structure. Is it structure? Ah, just look at the way that I'm typing this. I think this must be my fatigue. Sorry about that. We learned about market structure. When we learned about market structure, we learned that let me open my Google as well. Derive. Let me go to Derive Trading View so that we also reference with it. Last week we learned about market structure. Some people, um, they've been sending me some messages on Telegram asking me if um we can do or we can take entries just using market structure, and I said yes. Right. So what did we learn about market structure? We learned that we have highs, lows, highs, lows, highs, lows, highs, lows, highs, lows. This is the very moment that I want you to take your notepad and write everything that I'm going to tell you. If you were listening all along, this is the right moment to write it down. And sorry if my network kind of glitches, please don't exit the session. Right. So when we learned about market structure, we said we don't look forward for our law to be broken. Right. When our law is broken, what it generally means is we are now switching direction from an uptrend going to a downtrend. Right. From an uptrend going to a downtrend. But some people now, they don't know what is break of structure and what is change of character. So for me, right, now this is where it gets interesting. For me, a change of character happens when we fail to break the previous high, we break what looks like a low, right? This is what we call a change of character, right? Now, someone is confused. Right now, someone is confused and I know it. We call this a change of character. But um, I know the question that you're having in your head because I once had that question as well. What time frame are you using when you are mentioning about this? Right. This can happen in H4. This can happen in H1. This can happen in M30. This can happen in M15. Right. But I want you to put this in your head. When we have a change of character in our larger time frame, it means in our smaller time frames, we already have that change of character, or we have already witnessed that change of character. And most probably, maybe we would have witnessed it somewhere around this area over there, where I've put my arrow. Since I used to be using this blue arrow, maybe it has happened somewhere around there. Now, someone will ask, so am I still gonna enter this change of character, or I've missed this trade? I'll give you the answer just in 2 or 3 minutes from now. Now, when we have a change of character, the next thing that we now expect to see is a break of structure. We now expect to see a break of structure. Why am I saying we need to see a break of structure? Because this is the actual law that holds, right? But I want you to listen to these two concepts and you choose which one works for you the best, right? Now, when we have a break of structure, this is confirmation that we are now really, really changing direction. A change of character is telling you that direction might just change, right? So when a change of character tells you that direction might just change, we have two types of traders. We have risky traders, people who trade in a risky manner. What you do is when you see that you now have a full change of character, let's say you had marked your zone or your line like this, right? And you actually figured out that when price came to that point, let's say this is a candlestick. Let's say this is a candle. Sorry about that. What's happening here? Let's say this is a candlestick that I'm gonna be drawing here. Let's say this is a candlestick, and I know some people understand when you use colors, and your candlestick was like this, right? And the next candlestick that came at that zone was like maybe this, and you find out that it had a tail. What it means is this zone was not broken. It wasn't broken. Why? Because it rejected here, right? So what I consider a break for me is when I witness a full body break, something like this, that comes now and even covers the previous tail. A full body break below my zone and a full body break below those tails. Now that's what I now consider a break. So if we were referring to a change of character, right? And at this point here, we got a candlestick that looked like this, and let's put a tail on it. And we put a tail on it like this. It doesn't mean this zone was broken. We don't have a change of character here. But when the next candle that comes now looks like this now confirms that we now have a change of character. So when we have a full body break, immediately, not later, not tomorrow, not yesterday, immediately at this point, we start taking sales. We start taking sell entries. But your stop loss must always be above the high. Someone might ask, what is the distance that I can use to measure that stop loss from that high? These are questions that I know you all have. So let's say this was my candlestick high that I have here. And at this point, let's say here, this was my high, like this, right? If, I'm saying if, please listen to this. If we had a bigger tail, I prefer measuring the distance from that tail from the body, and I measure it from the opening from the close of my candle, and then I put my stop loss just above it. If I didn't have a tail, what I would do is I'll just take this body, the length of this body from here to here, and then I'll measure it just above the body height, and then I'll put a stop loss above that. Meaning that if my trades come and then it chooses to react, it can have a little play, or if it chooses to close above, now it's telling me that it has given me a full break. I'm hoping that you all understand. Now, I know some people will get confused, and I know some people are still confused. So now that we have our change of character, what does it mean? It means that we are now looking forward for our trade to come and give us a break of structure. Now, if we get a full body break, then that means our trade is broken, right? We now have a break of structure, but if it fails and gives us a rejection, we don't have a break of structure here. What it generally means is maybe our trade is trying to play around, right? Let's say it will give you maybe a small buy, and if you want to see that, do we now have a full body break? It will come and give us a full body break below this zone that it is sitting on, right? Which is the previous low, right? What you are seeing happens in M1, M5, M15, M30, H1, H4. Now, I want you to look at this now. So let's say you have seen this or you actually witnessed this in, we are now going to be introducing the Fibonacci and the order blocks. So that's why I said today's session is going to be more focused on entries. And I like entries a lot. I like entries a lot because this is where we start making money and stop playing around. So let's say we were still in that, we were in an uptrend, right? And this was my my H1, my H4, right? I'll repeat this. I once had a lesson about this. We said if we get a low, if we get a low and we are now sure that we have a high, right? What we do is if we want to know where our trade is gonna retrace, we have two ways. I'll talk about the first way. We have what we call premium and discount levels, right? So I'll draw a box between my low and my high, right? I said I'll draw a box between my low and my high. And I would mark 50% of that box. And 50% of that box for me is going to be somewhere around here, right? Now, what lies above is what we call my premium level, right? And what lies below is what we call my discount level. It's what we call my discount level, right? Now that we know we have a premium and a discount level, we also have what we call an equilibrium point, right? An equilibrium point, which is the 50%, right? So we don't, whenever we are retracing, we don't buy in the premium. We wait for price to come to the discount and we buy from the discount level and then we go up, right? But now you have to ask yourself, now I'm going to be introducing order blocks and gaps, right? So now what you have to ask yourself is, what lies in that? Sorry, I didn't mean to remove this. I don't know why I removed it. Your question now is, what lies in the discount level that I have to take note of? Right. So that's when you see that you have order blocks, you have gaps, right? So let's say you're doing this in your H4 again. Let me approve. I'm seeing. Let's say you are in your H4 again. While we are in your H4 and you are seeing this, right? Let's say at this point there exists an order block. Guys, this information that I'm now telling you, hey, please use it. Let's say there was an order block here and there was an order block here, right? I'll draw another point. I'll draw another diagram here to tell you the steps that we take every time we witness things like this. So let's say I'll put it like with a high, a low, a high, a low, right? So now you know that you have a premium and a discount level, right? I was supposed to just put it here like this, but I'm choosing to clone it aside. The next thing now, what you wanna do is you take your fib. You're taking your fib, and we learned that this last week we learned that most retracements they happen around the 0.618% and the 0.71%, right? So we'll say that from a fib point of view, the 50% is our equilibrium, meaning that what lies here is the premium and what lies down here is the discount, right? So you actually discover that maybe you have a order block. We said we take order blocks that lie below the 0.618%. Anything above that, we don't take it, right? Let's say you have an order block at 0.618% and you have another one at near your 100% down here, right? So what you do is you wait for market structure in a small time frame. Remember, we said you are in H4 here, but now what you do is let's now zoom in M15 or M30. What you are now waiting for is your market structure to come, giving you highs and lows. And once you get a break of structure at a 0.861%, a change of character and a break of structure, you remember the same method that I taught you. If you get a change of character, you enter. If you get a break of structure, you enter. But now, where is your stop loss? It's below that order block. Remember what we also learned about? We said whenever you are putting a stop loss on an order block, let's say this was your last buy before you started selling. This means that this is your order block, right? What you do is you mark your last buy before you started selling. Let's say our order block was like so, or it had a tail and a tail here. What you do is you come and mark it from that tail and you come and mark it from that tail again. This means that if your trade comes back in that order block, it's not supposed to come and break this zone, but it's supposed to come play around that order block and then fall. Right. So your stop losses for your order blocks is always just above the tail or at the tip of the tail or at the tip of that candle. Right. So now seeing that you have entered your trade at the 0.61% and you have a break of change of character and a break of structure, you just let price play. Why? Because you now have a proper and it's now proper. Right. You don't have to wait for H4. Why? Because if I had to choose H4 is just gonna be high, low, high, low, high, low. But now if you move on to M15, you're going to see those highs and lows when your trade is correcting or giving that retracement and then it continues going up. And then in that H4 is just gonna be a straight line. I'm hoping that this Zoom session will give us time to go on our actual charts. If not so, we have to wake up early in the morning and then finish this. I definitely like these kind of point of views. Why? Because they're the ones that really gives us true entries. We don't really waste much time talking about theories. When we do it practical, it now starts getting interesting, is it? Right. So let's advance. You're going to get in a situation whereby you're going to have a high, a low, a high, and let's say you're gonna have a high like this, right? Now, again, when we mark that box, so when we mark again that box, what you're gonna see is we're gonna have a premium and a discount level again, right? Now I'm gonna be talking about liquidity inducement, gaps and order blocks. We are moving stage by stage. So, what you're gonna see is since this is the real high and this is the real low over here, as long as we play in that range, we know that we are still in an uptrend. Even if you get things that looks like highs and lows inside here, that looks like highs and lows inside there, we know that we are still in an uptrend. So let that not confuse you, right? So at most, what you're gonna see is um At most, what you're gonna see is your price will play around in your premium levels, right? In your premium zone, and then it will give you double, let's say double bottoms, right? Your head now is gonna be like, oh, this is a double bottom, nice. So when price comes back again at this point, what am I supposed to do? I'm supposed to sell. I'm supposed to buy. Sorry, why? Because you're told that when you see equal lows or a double bottom, you buy, right? But what they're basically doing is they're basically inducing you into thinking that when you get to this level, when you get to this level, price is just gonna buy, right? But remember, there is stop losses here, right? There is stop losses there that have been put just below your double bottoms. But we already know that we are in an uptrend. So how can they continue going up without hitting those stop losses? They can't, right? So either way, they have to come and hit those stop losses. Now consider this. Before you broke this high here, there is an order block that was responsible for the break of that high. And usually they're around these areas, right? Or you can have a straight up trade that is an order block that lies just below at the near your low, right? Now they have to come back to these order blocks. Just by knowing the definition of an order block, you know that they have to come back to these order blocks and then mitigate and then go. Is it? So now you're seeing these double bottoms, and in your head, you're like, once I get here, it's a straight up buy. They've induced you. They've created this intentionally so that they come, they hit those stop losses, and let's do things in a proper way. You see highs and lows, highs and lows, highs. It will act like it wants to buy and then it will break. Highs and lows, highs and lows. And when they react or when they mitigate that order block, they change direction and then they start buying. So always be careful when you see double bottoms, double tops, triple tops, double tops, trend line liquidity. And then sometimes they can be like this. They can be like, let me come here. They can be like this. What I'm actually teaching now is what actually happens and messes up your mind. Everything that I'm teaching you is everything that happens and messes up your mind. So just be careful and look at it carefully. So now here, let's say you are a trend line trader, right? So you're gonna be like, sorry, this is not the way it shows up when it's on a trend line. So let me show you the way it shows up when it's on a trend line. So we have a high. Let's say we have a high, a low, and then before it breaks that high, it's gonna break it in a trend line, a high, a low, right? And another high here, right? So let me remove this so that we all see. Good one, good one, good one. It's actually so funny that we have 7 minutes remaining on this session. So now for me to know that I've made a high, usually then what you see is you're gonna have this maybe small rejection like this, right? Let's end it here. Now we know that we have a valid low and a valid high. Let's say in this area. Now, just because we have people who trade trend lines, what those people are actually gonna witness is you draw your trend line like this and be like, you know what? When it comes, I'm just gonna come and buy it from this point. So instead of you seeing that you have a buy, it's instead of you seeing that it's now buying from this point, it's going to break, right? And then when that trend line breaks, you're going to exit that buy. But remember what I told you, we have premium and discount level, right? And if we mark 50% of that, price is supposed to be buying from where price is supposed to be buying in the discount. And then you're gonna be like, okay, I was in a buy. Now that it's selling, I'm gonna exit my sell, right? And then you get in that sell. And then now you start thinking that it's now selling forever. Why? Because it has broken your trend line. But remember, we have an order block here. We have an order block here. And maybe sometimes what the market will do, the market is no mercy if you don't know what you're doing. What it will do is it will give you those double bottoms and to give you those equal lows or the equal bottoms. And since you were in this sale, you're gonna be like, now it's time for me to exit. Maybe this was a false breakout. And then just because you've seen that double bottom, you are going to come and try to buy it from here, but it's gonna break, come, maybe react on those OBs and then go up. So what I want you to know, based on today's lesson, what I want you to know is whenever you are buying, don't buy in discounted levels and in premium levels, right? If you are in an uptrend and if you are in a downtrend, it's the opposite. Wait for price to come to you. Don't rush price. The most important things or the most important elements in a trade, they lie in the discount levels, which is you can see your gaps, you can see your order blocks here, right? You can have a liquidity sweep, and then price just comes, reacts in those areas, and then it goes up. And for an analysis or for an entry that you see in H4, scale down to H1, right? And then try to see if it's making sense. Then take your entries in M15. For an analysis that you see in H1, scale down to M30 or M15. Try to see if it makes sense and then enter in M5. Right. And then maybe for your analysis that you do in your M15, I know we have scalpers here. Enter in your M1. Don't try to enter it in your M5. Why? Because in your M1, that's where your actual structure for that short term or for that long term trade is gonna lie in. We've got 3 minutes now, but let me just try to push on gaps a bit. We are going to do another lesson. Obviously, at this point, you know that you're going to do another lesson tomorrow morning. So now, what I want you to see is we said we have what we call gaps. And from the way that we learned gaps, we said that a gap exists in this manner. Let's say maybe we were in uptrend and our price was ranging like this, right? So what we need to see is we need to have our candlestick number 1, 2, and 3. If the tail from candlestick number 3 and 1 don't merge, what it leaves us in the middle is a gap. But when it doesn't leave that gap and when they actually merge, they actually give us what we call healthy price action or healthy price flow, right? And at some point, our candlestick number 2 is going to become our candlestick number 1. And our candlestick number 3 is going to become our candlestick number 2. And this unnamed one is going to be our 3. And as price goes up, we see that it leaves those gaps, right? And sometimes it doesn't. And the way that a gap works is when price comes back to that gap that was left, what you expect to see is price filling 50% of that gap. When it gets back to that gap, right? Filling 50%. if it doesn't fill 50%, it hasn't been filled yet. Sometimes price can just come, play just at the tip of the gap and then it falls. It still means price will have to come and react in that gap before it falls. I think we can refer to that lesson about gaps. Sometimes we just have so much to share that we have little time. Right. So apparently we've less than a minute left. What I'll do today or tomorrow is I'll mark some charts. I'll mark for world trade, I'll mark for currencies, I'll mark for volatilities, I'll mark two per broker, and then I'll post with some explanation so that we see. Let's wake up at 5 a.m. We're going to have another session at 5 a.m. definitely. Let's wake up at 5 a.m. We'll use the same link to join. Right. And I'm gonna be uploading this session on our Telegram channel today. So make sure that you go to the